Get started. So hello, I'm Tonya Sample. I'm with New American Funding, and I am a local residential lender. So I don't do anything with commercial, only residential. So 4 units, duplexes, primary residence, second homes. We're seeing a lot of second homes tick up right now. People that are wanting to get those cabins or even out-of-state properties. I can help with out-of-state lending as well. I'm not doing any lending in New York or Hawaii at this time. So we do have a lot of those snowbirds that are purchasing those second homes in Arizona, Florida, some of the Carolinas. So anyway, so that is certainly something. If you need help on that side, I can help you with that as well. So renovation, new construction, a lot of that is pretty big right now. People that are looking at homes might not be finding the home that they want. And so they might find a home in the right area or school district or price range, and maybe they want to do a renovation. Those are some things that we can help out with as well. So we are local. We also have Mary here today. And so Mary helps me with my marketing, helps me with events. If you're hosting open houses or you have a listing and are just looking for some marketing assistance on those things, if you're looking to do different things with YouTube, Facebook, social media trends that we're seeing. Hello, Alex. So if there's some trends that you're seeing that you want to jump on that wagon, Mary is my help on that side. So I focus on the monies, she focuses on the marketing. And so we're a great team. And yeah, so that's a little bit about us. Today's class, what did we officially name today? It's not even a class. It's more of a bounce some ideas and things that we're seeing in the market. What do we call it, Mary?
I think we ended up calling it Finance Strategies to Help Your Buyers Win.
Finance Strategies.
Kind of a mouthful.
Yeah, because who has buyers right now? Yeah, everyone. Who's been showing those buyers multiple houses? Who's been putting in multiple offers? Pretty crazy out there. It's really crazy. So I know I've seen some different strategies with agents, and this is where I want this to be interactive, because I want to learn from you guys and what you're seeing work for you. I know going above and beyond, asking price, waiving inspections, having those appraisal contingencies where the person will bring more money if it comes in low, if that appraisal comes in low. Quick closings, those are important, right? What are some other things that you're seeing out there? No FHA, we're seeing a lot more conventional get approved over those FHA or accepted over the FHAs. But what are some other things you guys are seeing? Who wants to share? Nothing?
I'm a fairly new agent. Got my license in October, but I have had 2 listings so far, and I did see both of the scenarios that you're talking about. In each listing opportunity, it was, waiving inspections, waiving appraisals. One opportunity was all cash. I had an offer to come in, we'll offer like $15,000 more than listing, which was way at the top anyway for what was going on. Yep. So a lot of it kind of came down to like what the seller really thought was realistic at that point, because it kind of seemed like way past what reality could potentially be. Yeah. And now I'm helping a buyer, and it's really, really hard. I mean, it's just one of those things where it's like, you'll go to look at a house and you think you're okay because it's the very beginning, and then all of a sudden it's like, oh, we want highest and best by like 3 p.m. today. And it comes like at 2 p.m. that afternoon or whatever. And, if you reach out to the listing agent and ask if there's anything specific they're looking for, they're usually pretty, mum is the word, I guess, not really sharing anything. Yeah, so
it's pretty general. Mm-hmm.
And then of course, I think you're in a position where there's so many people offering so much more over the list price that it knocks a lot of people out of the running, almost to the point where it's like the listing price probably isn't even where it should be listed at, to the point where it's kind of a waste of your time to take a client to the house because
Yeah.
you know that it's like, no, they're going to get $40,000 more than that anyway.
Yeah.
So it's kind of
Feels a little
frustrating that way.
Yeah.
Yeah, because if you look at we've been working in a neighborhood where it's like, all the comps are, they're all coming in like $40,000-$50,000 over what this list price is. So why are we listing it that
Mhm.
low anyway? You're just having so many more people tromp through a house that aren't eligible to buy it at this point.
Right. Yeah. So that's what I'm seeing too. And I'm on the side where I'm not feet on the streets like all of you are. But I am. So I'm not physically there, but I'm there behind the scenes, just trying to figure out how can we make numbers work, for this. And when I say numbers work, kind of like Claire, you mentioned, okay, so you had 2 listings. And those 2 listings, what areas were those in?
I had one in Roseville and one in Burnsville.
Okay, so when you sold those homes, let's talk about Roseville. It went on the market live. And when did you guys call highest and best the same day? With it, give them a couple days? How did you? How did that work?
We actually went like 3 days, and then we were done on the 3rd day. Actually, it was actually pretty smooth because it ended up being an all cash offer, so we didn't have to go through appraisals and things like that. But
Yes. Okay. So, do you remember how many offers you got on that Roseville house?
4.
Okay. All right. How many did you get on Burnsville?
Burnsville, we actually sold pre-market and also got 3 offers.
Okay.
So it really sold within the first day and a half.
Yep. Okay. All right. So I've been hearing, we had somebody say, hey, I listed a house for $325. I think it was probably the St. Louis part, $325. They ended up selling it, cash buyer, $405, $409. There were 40 offers on that house. There was another one that was listed over the weekend, 50 offers on that house. That's a lot of people. And so getting those, how do you get your offer accepted? And I will say the contracts that I'm seeing, some are coming in, over asking. Some really aren't that far off of asking. Maybe it is the amount of down payment that they're putting in. Maybe they're not asking for closing costs. I know that's really tough right now to get the closing costs. But what can our buyers do? Like how are we qualifying them to get them out there and be competitive? And so that's really what I wanted to share, is just on the financing side of things today, you guys, because all the lenders can do, I want to say the same things. Some don't always think outside of the box and strategize ways to make things happen. And so, with our market hasn't been like this. Like if we were to look back at November, this wasn't our market in November. We're getting similar, but not what we've been seeing the last, 60-ish days. I suppose it's April, so maybe a little bit longer. But the strategies that can come about is really what I wanted to share on the financing piece of different things to think about. Because if let's say that we had a client that was eligible in August and they're like, I want to buy in the spring. Well, they might be out there and it's different right now than what it was in August. And so the interest rates are different, right? That's a big change. But then the market has shifted to the quantity of available listings and the amount of people that are out there. So one is these people that are coming in with cash are like, people are asking me, Tonya, how are they doing this cash? Well, there's a lot of different ways that they're coming in with cash, but it doesn't always mean that once they hit the table and they're signing those documents that they're closing with cash. So some are using their maybe 401ks. They might be using gifts from family. There could be some other forms of money that they're coming up with so that in the end, if all else fails, they have the cash and maybe they do a refinance later. But in most cases, it's not beneficial to use cash to buy when you have such low interest rates. So they may refinance later, or what they're going to do is work dually to, one, I've got the cash, or two, I am going to work on financing. And if my financing will close on time, then I'm going to finance versus using this cash, but I have that cash to fall back on.
Is
So
that not something, Tonya, that's not, I mean, they're accepting an offer because it's a cash offer.
Mhm.
And I mean, I understand where you're coming from and how logistically it works, but is that not following the PA? Is that acceptable?
As far as I know, Jelena, I don't believe that there's anything wrong with that, as long as they have the cash. So in the end, if financing didn't work for them, that they were bringing that cash to the table, that's all that matters. So I don't believe that there's anything against the rules about that. I do think what you could do is you could ask your broker and just ask them and see if there's anything with that. But as far as I know, there isn't anything that rules that out as an option.
Is that the same, or could it be the same if somebody, wanted to put, or they were qualified to put 10% down, but they decided to only put 5% down? Could you write a 10% down and then change it to 5% throughout the transaction to cover costs or whatever the case may be?
Yep. So I'm going to answer the same way. I don't believe that that is anything that has to be disclosed to the seller. However, let's use an example of maybe they're going to go, let's say that they put an offer in conventionally and they're going to change their financing to VA or FHA. The seller has to know about that because that's different. But as far as, hey, I'm going to go in with 10% down and then looking at numbers, maybe they need to use some of that to offset some appraisal or some repairs or something that's come up. I haven't had anything where we've had to go back and adjust the purchase contract to say, never mind, instead of doing 10% down, I'm doing 8% down. Because the initial intent when they put that offer in is that their intent is they are doing 10% down. But if something changes in the meantime, usually I've never had to go back and do any adjustments on that. Unless it was a change in financing type, then that's definitely something that we'd have to change. Does that help?
Yes. Do you have
Okay.
to disclose then if you're changing from cash to financing?
Oh gosh, I don't know the answer to that.
Okay.
I don't know the answer to that. I think we could ask Jim. We should have had Jim on the call with us, huh? I don't know the answer to that. So I'm just going to make a note. And then what we'll do is I think that they post this as a recorded session. And then we can put that out and then we can email it to everybody that's on this call too. So that's a really good question. We'll let you know. Okay. And then, so cash buyers, they may change midstream as far as that. And usually it's like, oh, hey, there's been an appraisal ordered. What's going on? And then I know that it's like, hey, they're just going to see if they can get financing done. If not, they're still going to close with cash. We're not changing any dates or anything. And then another thing that we do, which I have seen other lenders pick up on this as well, but whenever I do a pre-approval for a client, I am collecting all of their income and asset documentation and reviewing that and getting anything that could be a hurdle out of the way up front. We also have the underwriter review that file. So we do an upfront underwrite, which is different than the automated. Automated is just you're running it through the system. Everybody should be doing that. That's in my industry. But what does set us apart is we're having the underwriter review that file. So going in on an offer, it helps you as an agent showing the home to the client, and also the client feel good about the pre-approval that we issue from New American Funding because it has been reviewed with underwriting. And so any of those hurdles will be hopefully addressed, or we say, hey, here's the deal. This is what we have. This is what they're going to be eligible for, and that's going to be tough, or we can only do this kind of financing or whatever. The same thing, having those conversations if we're looking at any assistance programs, any, vet ability programs, things like that. So that initial underwriting is completed. Really what that means is that as long as we don't have any changes as far as income, no changes of job, loss of life, everything should be just fine as long as the appraisal and the title come in good. And the property is financeable. So you're going to know that when you're out looking at those homes, if there's health and safety issues, things like that, that we need to be aware of. So that's that side of it. Two things that I wanted to share on the financing side. clients that are selling their home and wanting to purchase a new home, they may have to be contingent on the sale of their home. They might be using the proceeds for their purchase. They might be, their debt to income ratios may not be eligible for that. They may not be willing to take on the risk of having two properties at one time. But one of the things that I wanted to share today is the option of a recast. Have you heard of a recast before? It's not something that, okay, it's not something that a lot of lenders can do. It's not something that a lot of loan officers are versed on as far as how that works and if it can be done or not. So, but what a recast is let's say that I purchase a home and, well, here, I'll give you an example of a client that's doing it right now. So what they did is they had a primary home and also a vacation home. They wanted to purchase a new primary. And the plan was that they're going to sell their vacation home and that was going to be their down payment. Well, they found the perfect home. They didn't want to wait. They didn't want to wait to sell that vacation home, so they had the funds available. And so what we're doing is they purchased that home with the minimum down. They were doing 5% down was the minimum. And it was a conventional loan. And after they close on their vacation home, that's actually happening the end of this month. After they close on the vacation home, what they're going to do is they're going to take those proceeds from the sale of that home and they're going to do a recast on their new property. So when they closed, because they only did 5% down, they do have mortgage insurance. And they did escrow. They escrow their taxes and insurance, which they usually don't like to do that, but that's how their loan is set up when they did 5% down. Are you following me so far? So we did 5% down on a new primary, we have mortgage insurance, and we escrowed for taxes and home insurance. So they closed that way, they qualify. What they're going to do is once that vacation home sells, they're going to take those proceeds and they're going to do a recast. And so what that is they're going to take that lump sum money and they're going to apply it to their current principal balance. So they did do a 30-year loan. So they're going to keep that term, the 30-year. They're going to keep that interest rate locked where it was at closing. And they're going to just take that money, put it down on their principal. And what that's going to do is it's going to reduce that monthly principal and interest payment, right? So they still have their loan, they still have their terms, they just have a lower amount. So that recast is a way that they can still, as long as they qualify, they can put minimum down. But now once they did that recast, not only does that principal amount go down, so the monthly payment reduces, but they don't want to escrow. So that's going to go away. They're not going to have to escrow now because of what their new loan to value will be. And then that mortgage insurance is also going to go away. So they don't have to refinance to get rid of those things and they get to keep that great rate. So, so that is one example of how a recast has helped somebody. Now on purchasing, what this could do if that person could qualify for both mortgages, that recast could give them the option to maybe just pull that down payment if they don't have it in checking and savings. Maybe they pull it from another investment, maybe a 401k, because that's okay to do on a primary. There's things that go along with it, so it's not for everyone, but that's an option. Or maybe they get a gift. Maybe they get a gift of 5%, and then they're going to pay that family member back when they sell their primary. So that recast option is great. How many of you have heard of a bridge loan? Show of hands. Bridge financing. Okay. So a bridge loan is different than this recast. It actually is going to cost them more. And so has anyone actually ever had a client use a bridge loan before? No? Okay. So a perfect example of a bridge loan in the way that it would work the best is that I have a bunch of equity in my home. I'm going to do a bridge. So it's like a second mortgage or maybe the first mortgage on my property, which allows me to have a bunch of cash. So that when I go buy my next house, I'm buying it with cash, even though I have a loan on my current primary. I'm buying it with cash. And then once I close on my primary, I'll pay that bridge loan off. And so it's just meant to bridge us from our primary to our new home. And it's a short-term loan with high risk that is there intentionally so that we will only use it as a short-term loan. So someone that has a mortgage on their house, that bridge may not give them enough to actually be a cash purchase. So now what we've done is we have our first mortgage, we have a bridge, plus we're trying to finance that third mortgage. So we might be adding too much mortgage to them, and it may not help that situation. On top of that, there's closing costs, there's fees associated with a bridge. They're typically wrapped in, or they may have to pay them out outright. So a bridge is not always something that works well, where the recast is something that works much better. They're spending much less money and carrying less risk. So that's a little bit of the difference between that. Now, if you have a client that you're wondering, gosh, I wonder if any of these solutions would be something that they can do, let's just talk about it and see. Again, some of these fit well for some people, not everyone. Some people qualify just fine and others might not qualify. So those are just conversations we have, really per client. You've been there. None of them are the same. None of our clients are the same. They all have their different things. So that's a recast. Do you have any questions about that? No? Okay. Oh, let me add this. So a recast, in order to do that, to be eligible, the person has to have made at least their first mortgage payment. Their mortgage has to be current, so no late payments. And there's a one-time admin fee. It's about $300 to do that. They have to pay at least $5,000 or more into their recast. With New American Funding, we allow that recast to happen twice in the life of the loan with New American Funding. So we do also service our loans. If you've been to closing or you've had clients follow up with you and they're like, hey, I closed with whoever, but then I just got a service transfer notice. My checks now have to go to this, servicer. Their terms aren't changing. Their terms are staying the same. It's just the servicing gets switched out. And that's pretty common. New American Funding, for the most part, we carry our own loans. So at least for the first 5 years. Okay, the other thing I want to talk about is lender paid closing costs. Has anyone ever heard of that, or do you know about it? Have you had someone take advantage of that? Lender paid closing costs. Okay, sounds like free stuff, right? It's not. Well, this is how it works though. So when we have, let's say, a first-time home buyer, and they are bringing in, let's just say they're bringing in 3%. They're doing a conventional 3% down, and they don't have enough to cover their own closing costs. They know they need to save their money for their down payment, but a lot of people don't understand the closing cost piece. And so when we do the pre-approval and we go through the numbers, we can see that they have enough for that down payment, but maybe not to cover the closing costs. The closing costs, if you, I think everybody here has had transactions. So you have got your appraisal fees, your title fees, recording, your taxes, home insurance, things like that. So all these closing fees are things that are the responsibility of the buyer. If they do not have their own closing costs covered, they may ask to negotiate that with the seller. Well, right now, good luck. I've seen it on contracts. It's not something I see a lot of right now. And so if we don't have enough money to make it happen and we want to take advantage of these low interest rates, what else can we do? So the way that the lender pay closing costs would then work is essentially we're going to put it into the interest rate. So let's say that the interest rate was at 3%. And we needed, let's say, we needed like $4,000 or $5,000 in closing costs. So we may have to take that 3% up to maybe 3.625, 3.75. Okay, ick, because I'm paying that on my mortgage now, but not so bad. It's pretty good interest rate still. But there's a spread in there, and so what we can do is we can take that overage and we can apply that chunk as a lender credit. The lender credit cannot be used towards down payment, but it sure can be used to offset those closing costs. So they still have their closing costs, but we add a lender credit in there. And so that reduces the amount of money that then they need to pay for their closing costs. So maybe that is something where we can say, you know, can you get a gift to help cover some of this? If not, can we use a lender credit to help offset some of those costs to make all this happen? Because we sure can't ask the seller to pay closing costs right now. So those are some different things that we can do to help that buyer make that happen. Again, those lender credits can't be used towards the down payment, just the closing costs. So to help offset that. And you can hear, you know, just what I explained, there's some pros and cons to that. It'll help us get the house. It's still a low interest rate. We're paying a higher interest rate in order to do that. But if we don't have our own money and we want to take advantage of things right now, that's one way that we can do it. Okay. So that was one of the other things I wanted to talk about. Any questions on that? No? Okay. All right, you guys, down payment assistance is still live and strong. The Minnesota Housing Program is probably the one that most of us are familiar with. That's another way that we can help leverage getting some assistance funds to help with, if it's not down payment, just maybe closing costs. I do think there's pros and cons to that as well, because when we go in with an offer, the seller needs to know that we're using down payment assistance, and that could throw up a little bit of a flag saying, gosh, we don't have our own money. Someone over here is doing 20% down and they have their own money. So, you know, the down payment assistance is there. That can be leveraged as well. I don't know if it helps or hurts right now. So hi, you see him waving. So yeah, so that's another thing that we have. I mentioned Minnesota Housing, but there's plenty of assistance programs across the state. And so those are things that we can look at, you know, per client. As far as closing turn times, our underwriting on purchases is within 24 hours. So if we need to turn something quickly, we can. We've actually seen some fallout from some other lenders on the financing piece, and we've been here to kind of catch some of those and help get it through to the finish line. So if you're struggling, certainly reach out and we can help you with that. See if we can get those through for you. What's different about us being a lender versus a bank really works within, I'm going to say, a box. They work within a box, and this is what they can and can't do. Versus a lender, we're going to have a lot more options, and we're going to follow the guidelines of the program, but we're not going to have what we call overlays. And overlays in this industry are just added rules that sometimes get applied and can make it harder to do a loan in certain environments than in others. So as a lender, we just have a lot of products that you know, can really help clients out. So do you guys have any questions yet? Okay, how about appraisals? You want to talk about appraisals? If an appraisal comes in low, what happens? Yeah, okay. All right, so right now, what I'm seeing on many offers is that we have this appraisal contingency. So let's say that we are buying the house for $300,000 and it was listed at $275,000. Okay, so now we have that $25,000 difference. And so what I've seen is people come in and they say, hey, if it appraises low, I will pay above and beyond up to $5,000 of what that appraised value is. So let's say that it actually appraises for the $275,000. Okay. So what that means is, based on that contract with that $5,000 difference, is the buyer's actually buying it for $280,000, right? Instead of $275,000. So the lender, if we're doing financing, we are only going to lend on what that appraised value is. So what that means is, let's say that the client's doing 5% down conventional. I'm going to write the loan based on a purchase price is $280,000, but my loan can only go off of appraisal at $275,000. So based on that $275,000, that's where they're putting their 5% down, is on that $275,000, and everything else follows suit. That appraisal difference, that $5,000, they have to bring that in above and beyond. So they have their down payment, their closing costs, plus they have that $5,000 appraisal difference that they have to bring in. So we're going to collect it at closing. It's going to be on that closing disclosure. Everything has to be there, right? No money under the table. And so that's going to be on that closing disclosure. So they are buying it at that 280, but per loan, it's going to be based at the 275. Anybody have questions on that? Okay. One of the things that Jelena had brought up was, what if, they're putting 10% down on the contract, and then based on negotiations, they, there's an appraisal issue that comes up. And so we have to adjust it after the fact. Maybe the appraisal does come in low. And so the buyers and the sellers agree that, hey, you know what, we'll split that. So we're $5,000 off. You pay $2,500, I'll pay $2,500. Well, if they don't have that, what we might have to do is adjust their down payment. So instead of that 10% down, maybe now they're going to do 7.5%, so that it frees up some of those other funds so that they can still meet the needs of the loan. They can still qualify. As long as they qualify, we got to run the numbers and make sure. Some people are really tight with their numbers and they don't have room to move. So obviously something that anytime that you run into those things, you've got to check with their lender and say, this is what we have. I just need to make sure that they're still going to be eligible. And so communication with the lender is so important. And that when you're out showing houses in the evenings and weekends, like, you need the lender to be able to issue you your pre-approval letters, run numbers and those things. So they should be right there on the streets with you when you're putting those offers in. Not physically, but available for you. So anyway, so that might be one of those scenarios like Jelena had mentioned, where we have to adjust the down payment on the contract, but you don't necessarily, as far as I know, and we're going to get confirmation on this, I don't think you have to make an amendment to the PA where it's like, hey, we're going to, instead of putting 10% down, we're going to put 7.5% down. I don't think you have to do that, but we're going to double check just to make sure. We'll send that out. So that's the appraisal piece. What else are you guys seeing out there?
We had something really weird come up last week.
Yeah.
There's a listing down in Lakeville that's actually asking to see pre-approval letters for people to even go into the house and look at them, to even look at the house.
Wow.
And that they're going to videotape everyone who comes in.
I have a question with that one.
Interesting.
I have a question to piggyback off of that one a little bit. So I've done a few deals in Rochester, and one thing that they'll do in Rochester is they won't include the amount that the person's pre-approved for when they give the pre-approval letter. Is that something that other people are experiencing?
Okay, so the lender won't include the pre-approved amount?
Yeah, and then the agent won't update it. So they just won't tell you the pre-approved amount. They'll just say like this, they've got the pre-approval letter and this is what it is. They're pre-approved, and they won't actually put the actual amount in there of what they're pre-approved by.
Okay. So really what should be happening is that pre-approval amount should be on the letter. And so to answer that question, Christine, so for me, what I do initially is I don't put the dollar amount on there. I put the address on there because we've already identified numbers and have an idea going in. And so if something were to change where you're like, you know what, we're actually going to offer 5,000 more or less, I don't want you to be hindered on being able to submit that offer if I'm driving down the road and I can't send you an update, right? So that's kind of the thought process on that piece where I operate. So not everybody operates the same. So that's where I'm at. Now, if they come back and they say, yep, we like your offer, but we want the amount, maybe the purchase price and the loan amount, or, whatever on this letter, or maybe it's a HUD home and they require those numbers all to be on there. Absolutely. Any lender should be putting those numbers on there for you if that's something that you want. So it's more of a strategy the way that I operate by not putting it on initially, but absolutely we'll add it.
Yeah.
Does that help?
Yeah.
Okay. Yeah. And they should be putting, if you're like, hey, we need the numbers on the letter, they all should comply with that. Because those are the numbers that the person's approved off of. Okay. So then Claire had mentioned, so Claire, was that a builder that's doing that?
No, it's an existing home. It's probably 20 years old. It's kind of bizarre. And so we went back to the lender and said, well, where do we really want to be with this letter and the dollar amount on it? Because like we were talking about earlier, people are listing at 300, but it's going to sell for 365.
Yep.
So it's kind of like, well, if you're listing at 300 and I say the client's, pre-approved up to 400, well, then what's not to say the seller's going to take advantage of that?
That's why I don't put the dollar amounts on them initially.
Mm-hmm.
Yeah.
Yeah.
So, but on that, if that is something that we're going to start to see in the market where they're like, before you even come into my house, in order to schedule a showing, you need to send me a pre-approval letter for your people, and everybody's being recorded, by the way. I think that that's just something that, hey, lender, you know what, we're going out to see this house. I need a pre-approval for this one. If you need a dollar amount on it, then that is just a conversation. Like if you had given that information to me, I would just say, okay, so based on this house, what are we, that's where we start to strategize. What are we thinking that this offer is going to look like? It doesn't mean that's going to be the offer, but for me to get an idea so that I can put a dollar amount on there, and I can also share the monthly payment, closing costs, and everything with the client. So they know going in, if I want this house, this is about what it's going to cost me. And then once they see it, they may say, you know what, I want this house. However, based on, they're calling for highest and best, they're all these things, we need to adjust the numbers. That's where I would say, come back to me and let me know these things so I can update that letter and get it out for your actual offer that's being sent. So you guys really, lenders need to be working with you guys on this stuff and, getting you the letters that you need when you need them, crunching numbers if we got to do it. It's all hands in on this. I mean, it's just, I'm calling agents, by the way, oh my gosh. So I love to, what I suggest whenever we are submitting an offer is when you submit that offer, copy me so that I can see it and then I can reply and say, hey, here's some information. I will also call that agent, love to call the agents just to say, hey, Claire sent this offer over. This is the client on this address. I just wanted to let you know this is where we're at with it on the financing piece. Let me know if you have questions. My cell phone, text me, call me, whatever. What has been happening over the last 3 months is they're like, oh Lord, someone else is calling me. You know what I mean? Like they are getting so many phone calls and text messages. Like you just got to make their time the most efficient and be fast with them, and no small talks by any means. So anyway, so those are things that I like to do just to help on that presentation side. Because then now they know that, oh, the lender works at 8 o'clock on Friday too, whatever. So we're all in this together and just working towards getting those offers accepted. So that's something that you certainly want your lender to be doing. I know I've had some people where they're like, oh, we're at the credit union and yeah, they're so great, but I can't get them on a Sunday and I'm losing out on this house because I have to get my offer in 2 hours, So those are things that, it's just being available and there for you guys when you even have questions, even if we're not submitting an offer, we're just trying to work through crunching, or they come back and they counter offer and we want to know, can we get this done? Can we do it? The house is vacant. It's a flip. Can we close in 20 days instead of 30? Things like that. So one other thing I'll mention is we sure are seeing, and you'll hear this in the industry, but we sure are seeing a lot more appraisal waivers. And so has anybody had a buyer have or represent a listing where you have an appraisal waiver? Maureen has. Okay. So what that is it's more seen on a primary residence when they're putting usually at least 20% down. I've seen it when they've been putting less down. We see it a lot on refinances, but we are seeing it quite a bit on purchases as well. And there's an automated system that these values are put into. So I don't even know all the data behind it, but anyway, so when we have this offer come through, I can run it through the system. And if we've got a really strong buyer and we've got a strong property, we might get an appraisal waiver. And so then it's up to the buyer if they want to waive that right or not. Most of them are like, oh, I'll skip the $500. I don't want to spend that if I don't have to. And so especially if sellers aren't paying closing costs now. And so it's not going to change their mind whether they have the appraisal or not in today's market. And so appraisal waivers sometimes do happen, which is super great. And you can also close sooner if you get those, because you're not having to wait for that third party report to come in. So if it's a vacant home, to be able to go back to the sellers and say, hey, would you mind closing in 5 days instead of, 20 days? Maybe that's something that they're open to. So there's that as well. Let's see, what else? Think of anything?
I have a question.
Yes.
So I lost a listing from an appointment where the sellers were extremely unrealistic about what they wanted to list their home for. They wanted to take advantage of this market, which I'm sure that, so costs are inflated, right? But the house comps were bringing the house to about 430. And I thought probably the most aggressively we could list it would be 500. It's only 2,000 square feet on Dutch Lake. It just got listed last night. So I think they must have been interviewing tons of agents until they got what they wanted. They listed it for $750.
I know which one you're talking about.
Oh my God. And I'm thinking,
not be listed at $750.
will that not be a logistical nightmare? It would have to be a cash buy. Like, how on earth, if the appraisal comes in at like 430 and they're trying to sell it for 750.
Mhm.
No,
Yeah.
I don't think it's going to
Doesn't
sell for
sell,
750. I
and
think
it's
it's going
just
to
gonna
sit in
sit
this
there
market and
and
they're going
sell.
to figure this out. But I couldn't even believe that.
Yeah.
So-
What were you saying, Jelena?
My guess is the agent just took it to sit on it so they can get buyers and do price reductions until it's time to sell,
Yeah. Or another thing could be, like you said, you showed the comps to them. Another strategy could be, I tell you what, we'll go with your offer price, but if it sits for more than 10 days in this market, then we're going to drop it down to my price, or, whatever that looks like. But what it did is it just was a disservice to them too, because now they're, if they're pricing at 750 and it's really only valued at about 5 something. I know. I saw that. I was like, "Oh, wow!"
I had to do that
saw
with
last night, and I about died when I saw it come up. Sorry.
I had to do that with my client Maureen. They wanted $375 for their home, and every house in their area, I think like the newest version of that house was going for $320, but everything was renovated in like the last 2 years, and they had not. The kitchen was still from 1960 when the home was built. And so I was like, okay, after 10 showings, then we'll lower the price. So like I kept calling them to lower it and lower it and lower it and lower it until like we finally got it to a good spot and started getting like a lot of offers on it. But yeah, it was, yeah.
Yeah. And that too, I'll kind of put Jelena on the spot a little bit here. This type of conversation with whenever you're listing a home, and the pricing and a seller being realistic or not, some of that can also come into your scripting and being prepared for those conversations. Because we're trying to satisfy our sellers so we can get that listing. At the same time, if we're not selling that, these houses, we know what the stats are of how fast these houses are selling in Minnesota right now across the United States. But anyway, so I was just going to say, Jelena, I believe that she has randomly does maybe some scripting, or there's some groups in the office that does some, different scripting, and maybe that could be one of those things that we could add to the list with those listing presentations, just the pricing and strategies behind those conversations.
It isn't something that we formally implemented yet, but it is something that's coming so we can all practice that. And same with, getting listings and what we should be saying to people to convince them that now is the time, or, or find out if they're ready and do what's best for them. But I think that's something that is needed for all of us.
Yeah. Yeah. I'm going to share one other thing that actually was just something that happened today. with a client. And some of you may already be doing this. This particular situation, they hadn't had this conversation. And so it just kind of brought up something else. But I've got a gal that she wants to sell her house, and it's going to be very tough for her to prepare that home to get the top dollar that she wants, so that she can go on and purchase. She's not able to purchase non-contingent. She's for sure going to be contingent on her home. And so one of the things that we had talked about is, and maybe you do this, but if you can find the right buyer, which you have such a pool of them that are putting offers in on one property, that it hopefully is something that would work and be an option for some. But for this gal, the thought was that in her current situation is that she could go ahead and list her home. You know, a lot of times when sellers are hearing that, oh, it's a seller's market, it's hard to find properties, it scares them into, okay, so if I sell mine, where am I going to live? Like, we've all had those conversations with people. And maybe right now that could be a fear or concern factor that's a little higher. And so anyway, so one of the things for her to be able to be non-contingent was, you know, if you can get a buyer to come in, you know, I don't know if it's an investor or if it's going to be a primary, but let's say that it's a first-time home buyer, maybe they still might live with their folks, maybe they're renting. If they could purchase that home from you and then rent it back, now you're not going to be contingent upon your home selling whenever you go to put an offer in it. Also, for this lady, she's older, and it gives her the opportunity to get some of that decluttering done and slowly move into her new home. She doesn't have any family here. She's an older lady on her own. So anyway, so that was one of the things that we had talked about, that, you know, with so many buyers, they might be good with going ahead and getting that purchase underway, taking advantage of the low rates, also in the end helping her by doing a rent back, and then she's no longer contingent on her purchase. So just an idea. So let's see, I think that is all that I had for now. You know, if you guys have questions, different financing that we can help you with, I welcome a call and see how we can help you out. And my cell phone is actually, I think most of you have my cell phone. Claire and Alex, I don't know if you do, but we'll email
Alex
it.
doesn't.
What's that?
Alex doesn't.
Alex doesn't have it. So we will, you guys in the same room over there, aren't you? We are going to, Mary will send a follow-up. So we're going to circle back with you on that cash versus financing. Jelena had asked if we needed to do any updates to the contract. I'm just going to reach out to Jim Camarada on that and find out what the real, you know, to make sure you're following the rules, what that is. And then we'll send out my contact information, and just let me know if you'd like to schedule a time. But otherwise, thank you so much for joining and adding into the conversation. I appreciate that and love to learn from you guys too. So yeah, so have a wonderful Tuesday. Hopefully you get outside before it rains. I don't know if it's raining yet, but
Thank you so much.
Thank you.
thanks you guys. Bye.